Okay. Here we go. Sunday. What is it? 11/24, 2024. Going to go live. Talk a little bit about MicroStrategy because I think this is one of the most misunderstood stocks in the entire equity market, and it is pretty phenomenal. The incredibly poor takes that so many people have come up with over the last 24, 48 hours. So just wanted to talk about a few things, do a little bit of analysis, talk about QQQ, what's out on the horizon, and yeah, think about the next week because I think this is going to be a monumental week for MicroStrategy. I think it's going to be a monumental week for Bitcoin. And I wanted to walk through some of the reasons why I think that's the case. So we're going to get into it a little bit. First of all, the reason this trade is so incredibly complicated is because you need to have so many facets or so many different perspectives and different, you need to have knowledge about so many different things to understand the complexity of this trade. For example, you need to know about macroeconomic environment. You need to know about currency. What is currency? You need to have understood Bitcoin and where Bitcoin could potentially go in terms of a global reserve currency. You need to understand all financial markets, right? Not just equity market. You need to understand the equity market. You need to understand the bond market. You need to understand interest rates. You need to understand the insurance market. You need to understand the real estate market. You need to understand how opportunity cost of capital works from all of these different pools of capital. In addition to that, you need to understand general relativity. So you need to understand the relativity of all of these different pools of capital as well to understand how they interact, how opportunity cost works, where capital moves, how quickly it moves, how those markets are developing and trending and changing over time, how they're evolving, how can digital capital change how those markets interact, and where it comes into play. You also need to know math, right? You need to understand math very well. You need to understand statistics, have a general understanding of calculus, an understanding of options. You need to have an understanding of options framework, maybe understanding like options Greeks, like how the price change in the underlying stock changes how options move. You need to understand options skew. You need to understand how market makers set price for options. You need to understand the players in the game that are buying and selling options. You need to understand actuarial framework of probability. You need to understand duration of assets. You need to understand Markowitz modern portfolio theory, like how, how companies and asset managers manage their portfolios, diversification of assets within those portfolios, and understanding risk return frameworks. And then you need to understand computers. So like this trade is so complex. I mean, I get why people don't understand it because there's so many different things that you need to understand and how they all interact and how they work together. So uh, I just want to put that out there because it's very clear that people are surface level looking at MicroStrategy and calling it a Ponzi scheme because they're not willing to put in the effort to understand the different facets of all these different moving pieces of the market and understanding and kind of breaking your conceptual reality of how capital can be used in a digital format. So I think this one guy said, I'm bringing the sheep out to slaughter. It's like so silly. The other fundamental change here and the fundamental difference that a lot of people like to bring up is this mania component. And a lot of people think that MicroStrategy is a meme stock. And I'd love to continue letting them think MicroStrategy is a meme stock because it's not. I think, with MicroStrategy having more Bitcoin than any other company in the entire world by more than 10x and having more than 3 or 4 times as much Bitcoin than any other company, and then all publicly traded companies combined, that puts them in a position of power where they've got monetary wealth to uh, capitalize on a future digitized or digital capital world where they would be able to put that future Bitcoin at risk as collateral to generate a yield at some point in the future, which would be in exchange for additional Bitcoin. Another thing that a lot of people fundamentally don't understand, and this is mainly a problem with most of the Bitcoin maxis, is that they all say, like one Bitcoin is one Bitcoin. And I agree with that. But they don't understand that there's going to be an equity market in a hyper Bitcoinized world, right? If the fiat system is gone, other things are still going to have value. Real estate, commodities, equities. There's going to be other reasons that people hold these other types of asset classes. Like Bitcoin isn't going to be the only value in the entire world. So there's so many different things going on. So another thing, people try to compare MicroStrategy to GameStop and this mania because with thinking about GameStop, what was the exit strategy with GameStop? The exit strategy was basically take down the entire like hedge fund system. It was unfair. But at the end of the day, what did you hold if you held GameStop shares? You held a company that was selling video games and some decaying real estate. And there was there's a valuation on whatever that may be. Now, if you think about MicroStrategy, what do you hold? You hold equity in the company that has more money and power than any other company in the entire world and will continue to have that pole position for the rest of time. So when I think about my longevity of holding this trade, I am holding MicroStrategy forever. And people don't understand that. What is the exit strategy? The exit strategy is strategically selling covered calls on my position over time, where I'm okay if the price of the stock goes above my covered call position. I'm okay getting rid of selling a couple shares in that circumstance and earn a yield off of it in the interim. This is akin to buying Apple in 1990, Amazon in the 2000s, Nvidia in the 2010s. This is this is the next top 10 publicly traded equity of the 2020s, right? Like everybody right now has an opportunity to front run institutional buyers. And that's kind of what I wanted to talk about. This next week, I think, is going to be pretty insane. There's a lot of eyes on November 29th and QQQ, potential inclusion. So QQQ is the 5th largest index ETF in the world. I think it represents about 300 billion in assets under management just in that one single fund. So why is this important? If MicroStrategy gets included right now, I think they're ranked somewhere around 45th or 50th top 100 global publicly traded NASDAQ listed companies. So we're looking at potentially a significant amount of capital that would be going to buy MicroStrategy so they could be included in the ETF. And these are buyers that are agnostic to whatever the price is. They don't care what the NAV multiple is. They are buying MicroStrategy at any price. So what I wanted to do is just go over the QQQ requirements, right? So this is directly from the QQ, invesco.com/QQQ, right? You guys can go look at this exact thing. So here are the requirements to get added to QQQ. You need to have at least 1.25 million publicly traded shares. MicroStrategy's got 224 million. Check. A regular bid price of the company's stock shares of at least $4 at the time of listing. Check. At least 450 round lot shareholders. There's a shitload of shareholders. Check. A minimum of 3 to 4 market makers for the company's stock. I know that there are they're way greater than 3 to 4 market makers. If you look at the list of institutional investors, there's at least a dozen, I'm sure. Morgan Stanley, Citadel, Jane Street, like all of those companies. Then you need a minimum of 450 shareholders with 100 plus shares each. Check. That's definitely a thing. Additionally, companies must meet one or more of the following financial thresholds to be listed on the exchange. Total cumulative pre-tax earnings for the prior 3 years of $11 million. Cumulative pre-tax earnings for the prior 3 years at $11 million. So they have, over the last 3 years, I think there are four positive quarters, definitely greater than $11 million. Total aggregate cash flow of at least $27.5 million over the last 3 fiscal years. They're generating like $500 million of annual revenue. So check. Lastly, an average market cap of 850 million or more over the past 12 months, and the prior fiscal year revenue at least 90 million. Definitely check that one as well. And then there's one more that a lot of people are getting hung up on. Where did it go? It says non-financial companies. Oh, here we go. 100 largest domestic and international non-financial companies listed on the NASDAQ exchange. Perfect. So I really want to hit on this point because a lot of people have said, oh, well, now MicroStrategy is a Bitcoin treasury company. Now MicroStrategy is a Bitcoin treasury company, and they're buying a ton of Bitcoin. That makes them a financial company. My answer to that is no. All companies listed in the entire stock market can be Bitcoin treasury companies. They're all just fiat treasury companies at the moment. All companies, aside from MicroStrategy, are fiat treasury companies. Any single company in the entire market can go raise $1 billion of convertible debt, and they can go buy real estate, right? They could go buy other assets. They could go do other things. Any company can do the same exact stuff that MicroStrategy is doing right now in fiat. All companies, every company that's operating in the entire world is a treasury company. They hold assets and they want to protect those assets and they want to grow those assets. So MicroStrategy being a Bitcoin treasury company is just getting creative with their treasury. They're accessing pools of capital markets to improve the return of their treasury. Now, people could say, all right, well, this is going to come to a committee. Well, there's no reference of a committee in QQQ at all. And then the next thing I wanted to bring up was going to my spreadsheet here. Okay, so I wanted to bring up the NASDAQ screener. The NASDAQ screener. So this is directly from the NASDAQ website. So you can go in and you can pull data on any of these companies that are listed by the NASDAQ exchange. And you could go look at the market cap of all these companies. You could pull all this data down. And the reason I did this is because within that NASDAQ screener, maybe I'll make this a little bit bigger. You can see that there's a column here for sector and industry. So you could look at all of these companies and you can see what sector and industry they are and what their market cap is. And this is ranked by market cap. So then you come down here to MicroStrategy, right? And you look at MicroStrategy, you look at their market cap, 85 billion or whatever. This might be old, but their sector, as identified by NASDAQ, is a technology sector. As defined by NASDAQ, they're a computer software, prepackaged software company by industry. So this leads me to believe that they will be treated as such. If you look at, because this is directly from the NASDAQ website, if you look at another company that I've got highlighted here, it's AppLovin. AppLovin was recently added to NASDAQ QQQ, NASDAQ 100, about a couple weeks ago. I think it was a one-off addition because they wanted to get rid of Dollar Tree. And AppLovin got included, and they were a technology company with computer software programming, data processing. So I think that's bullish for potential inclusion. Another thing that's come up is Saylor's voting power. There's been some concern that people say Saylor's got too much voting power. So I ran in and I did an analysis of this as well because I wanted to refute this voting power concern. First of all, Meta is included in NASDAQ 100 QQQ, and Meta and Mark Zuckerberg has 63% of the voting power in Meta. So just want to throw that out there. Like, I don't think voting power should be an issue. I don't think it will be an issue because Zuckerberg's already got 63% of the voting shares. However, I'm going to do the analysis anyway because we just need to get rid of the bearish sentiment. So you look at MSTR shares by class. So this is from the recent report of the ATM issuance that they had last week. So you got Class A shares, 205 million Class A shares, 19 million Class B shares, total of 224 million shares. Now, every one Class B share represents 10 votes. So in terms of total votes, there are Class B shares of 196 million votes, Class A share votes of 205 million. So total voting would be 401 million total votes. So Class B shares hold 48.9% of the vote, and Class A shares hold 51.1% of the vote. Now, Saylor owns 100% of the Class B shares, and then I also assumed that Saylor owns 1.43 million of Class A shares. This is from the 2024 proxy statement, which could be dated. I think that might include some of the 400,000 shares that he sold earlier this year. So coming into Saylor voting power estimate. So estimated Saylor shares, we've got Class A 1.4 million, Class B 19.6 million. Estimated Saylor votes, we get to 197,831,000, part of 401,435,000. So Saylor's percent of total voting power in this analysis is 49.3%. Now, a lot of people say, "Oh man, well this is bad for MicroStrategy because Saylor's total voting power has fallen below 50%." Well, who the hell is going to vote against him doing what he's doing? I know for sure, damn well, that I'm going to tell him to keep doing exactly what he's doing. And I know that there are plenty of people on the board and plenty of other shareholders in this community and other communities, BlackRock, Capital Group, that are going to tell Saylor to keep doing what he's doing. So you only need to convince 0.7% of the rest of the shareholders that vote to vote with Saylor. So I think this can change over time. I think there's significant amount of voting power that can be eroded for Saylor, and it wouldn't make a difference at all. Okay, so we talked about that. We talked about voting power. We talked about the screener. The other thing I want to bring up, I think over the next week, I think Michael Saylor may announce that they've purchased 100,000 plus Bitcoin over the course of the next week. I don't necessarily think it will be all on Monday. It may be tapered out over the week. I think there's a high likelihood that Saylor raised about $10 billion of capital last week to purchase Bitcoin. And I suspect there's going to be some effort to kind of crank up the volume as we get close to the NASDAQ QQQ rank day. The QQQ rank day is on Friday, November 29th. It's a shortened trading period, and there's effectively incentive to drive the price as high as possible, getting up to the rank day. So they're included with the highest possible market cap. Now, why is that important? Why is having a high market cap important? Well, having a high market cap, it influences how much capital flows to your company from an index ETF. So I think we're in really unprecedented territory here with MicroStrategy getting included really high in the index. I think, other companies that may have been included relatively high might be like Tesla back in 2013, or even AppLovin, potentially Palantir at some point on the horizon. But when thinking about those other circumstances, like Palantir, for example, I think they would be ranked about 20th. The only reason they would be ranked about 20th is because they're already included in the S&P 500. So they've already gotten the index ETF boost from the S&P 500, and now they're going to get added to the QQQ. MicroStrategy is the opposite. So they are not included in the S&P 500. And if they get included in QQQ, that will just set kind of this base layer of new shares that will just be permanent capital that will be buying MicroStrategy into perpetuity. which would give them potentially future larger valuation for getting included into a larger index like the S&P 500. Now, again, why is this important? So Invesco QQQ. So this is dated. This is from like, I don't know, 7 or 8 months ago, but 251 billion in assets under management. I think it's more like 291 billion in assets under management. So if you think about a couple of situations, them getting added to QQQ in these different circumstances, if MicroStrategy had a market cap of 116 billion, that of Starbucks, so very close to where we are today, that would result in a 0.74% allocation to MicroStrategy, which would result in roughly $2.4 billion of buy side volume that would be buying MicroStrategy shares. So you may say, Jeff, holy moly, 2.4 billion. That's crazy. That's a lot of people that are buying the stock. Yes. I think the answer to that is absolutely yes. And what may that do to potential stock price? So in understanding how stocks are traded at the margin, $2.4 billion of buy side volume just kind of depends on like how many shares people sell, like whether this was front run and there's going to be people that are selling to passive inclusion like QQQ, or if people are holding on to these shares into perpetuity, understanding that there's more catalysts on the horizon with FASB fair value accounting, S&P 500 inclusion, Bitcoin bull market run, et cetera, et cetera. So when you think about how could this impact price? And I think some of these numbers can get a bit nutty. And I've done a little bit of math to just kind of wrap my head around it a little bit. So I took this screenshot over here on the right-hand side to represent the order book. This is the NASDAQ order book from last week. And at this point in time, $62 million of buy-side volume would move the price of the stock from $496 to $538. That's a delta of $9.2 billion. Okay, so $62 million of buy-side volume moved the stock $9.2 billion in market cap. So that multiple on flows is 147 times what the capital inflow was, just in looking at this order book. And we've got a question here that come up that I think this is important to mention. This is not a $2 billion annual purchase. This is a $2 billion one-time purchase to push them into the ETF and have their representative weight within the ETF. So when you think about this multiple of 147, you're like, okay, that seems pretty high. It could be pretty high. It just kind of depends on who is selling their shares and whether or not this is being front run and how long it's being front run and who's selling, yada, yada. So I put together this little table over here on the left-hand side. Maybe I'll make it a little bit bigger. And this represents, the change in market cap. So I took multiple different multiples to understand how the change in market cap may change the price. So as I said in this analysis that we just ran over here on the right-hand side, the multiple on flows is 147. So that might be a bit egregious. That might be high. Maybe not. Maybe it is. So I look at different multiples starting from conservative to maybe on the higher end. And a 33 times multiple would increase the market cap by 79 billion, or about $354 in price. And a 100 times multiple may increase the market cap by 241 billion, which may increase the price by $1,000 a share. This is in addition. This is not what the stock price would be. This is in addition to what the stock price is today. So that's with a 0.74% weight, which is roughly around where the price of the stock is today. Like, I don't think this is too far. I don't think it's too far out to be around Starbucks valuation. It's only about 10 slots from here. Now, looking at a larger allocation like Intuit, where you've got $179 billion market cap, if we see a frenzy, right? If we see a frenzy this week where Saylor announces a 100,000 Bitcoin purchase on Monday or Tuesday or Wednesday, and it shoots the stock into oblivion because the multiple will instantly drop on the stock, and people will instantly see that the stock is potentially undervalued. That may result in a slingshot of the price normalizing the multiple back up to what the prior multiple value was. Hold on one second. So if we look at a valuation like Intuit, uh, going up to 179 billion market cap, we could see a weighting in the Nasdaq 100. This is labeled incorrectly. It should be QQQ. QQQ. So this could result in around a $3.6 billion $3.6 billion of capital flow into MicroStrategy stock, which again, looking at these different multiple outcomes, you could see scenarios where the price of MicroStrategy changes roughly $2,000, anywhere from $540 up to $2,500 accretion to the stock price in a very short horizon. So that's pretty crazy, right? And a lot of people would probably think I'm nuts, but I don't really care. And this is just math. And this is going to be the most hated rally of all time. There are so many people that don't understand this trade. There are so many people that don't understand Bitcoin. There are so many people that don't understand capital markets. Well, I guess what I'm saying is it doesn't matter, right? ETFs are here. Bitcoin price is going up. MicroStrategy is adding more Bitcoin to their balance sheet. They're already included in market cap weighted index funds. Even if they're not included in QQQ, the fact that the market cap is going up relative to because of their underlying Bitcoin holdings will push future dollars into buying MicroStrategy at a point in the future. So, as I've said previously, MicroStrategy doesn't need QQQ. MicroStrategy doesn't need the S&P 500. QQQ and the S&P 500 need MicroStrategy. This is a debasement hedge, and you could understand a scenario where if QQQ didn't include MicroStrategy, the next window to include them would be next year. And if we see the price of Bitcoin do what we think it's going to do and get even remotely close to gold parity, we're looking at MicroStrategy holding, I don't know, $200 billion of assets alone. And I mean, let's just say simple multiple of 3, you're looking at $600 billion market cap. That makes this scenario way different, right? Like if you get added at a Tesla like valuation, that's $9 billion of cash flow going into the MicroStrategy stock. I mean, basically the game theory is set. I think the playing board's set. The game theory is set. I think it could be a pretty wild couple of weeks here. So, and this doesn't even take into consideration like the S&P 500, right? If they get out in the S&P 500 at a $600 billion market cap, something like Tesla, we're looking at $26 billion in total buy side volume from S&P 500 and QQQ. So, I mean, this could get super nutty. And the thing is, there's going to be thousands of people that are telling you you're stupid. This is a Ponzi scheme, et cetera, et cetera. And it's like there are so many like hardy Bitcoin holders in here that are going to be holding this thing forever. And I'm cool with the volatility. I'm totally cool with the volatility. I'm going to hold it forever. There are going to be times where I'm going to sell covered calls on 5% of my portfolio to generate a yield. And if my shares get called away because my stock price is hit, great, because the call premiums are so freaking high on this thing that you can run this, you can earn a yield of 4% a week by selling call options. And if the price of the stock goes to your strike price and your shares get called away, like the rest of your portfolio value is greater than it was previously. So I think that's a lot. I think many people don't understand that people are going to hold this stock forever. This isn't GameStop. This is the Bitcoin equity. And there are some other Bitcoin equities, but this is the Bitcoin equity. So anyway, I just wanted to pop in and say some words because the amount of FUD has been insane. The amount of shit talking that we've seen from just poorly researched accounts is horrendous. Um, and that was the whole purpose of generating and starting this whole like MSTR True North um, group, was to prepare for this situation where there are hundreds of thousands of people that are telling you you're stupid and thinking that they caught you on something you haven't already researched. We've spent 10,000 plus hours researching this stuff and communicating this stuff over the last 12 months. And we're at the knife's edge of what's going on with this trade. So yeah, thank you everybody for the support. I think it's going to get a lot crazier, and I think there are some really exciting times ahead. So I think that's it. Everybody, I'm looking at the comments here. Everybody wants to talk about downside risk, and I think downside risk is absolutely a possibility, right? Like the price of Bitcoin goes to $1 million a share and then comes back down to $500,000 a share. I think there's MicroStrategy is still going to be in a position of strength, right? They've got significantly more Bitcoin than anybody else, and their cost basis is so low that their holdings are going to be so much more valuable than their underlying cost basis. Will there be volatility? Will there be people shorting MicroStrategy at kind of peak Bitcoin bull markets? Absolutely. We will absolutely see that. And some of the other downside things I think could potentially happen is like regulatory environment, which is the board is set really well for Bitcoin and Bitcoin backed equities. Yeah, I mean, it's crazy. This whole thing is crazy. But anyway, I think we've got a couple other conversations on the horizon, and yeah, here we go. Take it easy. Enjoy the week.